welcome back to this channel. I am Juliette, the creator of Concierge CPA, a free platform to help students, business owners, or just anyone interested in learning accounting and finance joyfully. Today we're going to discuss an essential report not typically talked about in the financial markets, the trial balance. You may be wondering, what exactly is a trial balance and why should I care about it? It's true that it doesn't get as much attention as major financial statements like the income statement, balance sheet, or cash flow statement. But I will tell you, the trial balance plays a crucial role behind the scenes. It's an indispensable tool for accountants, business owners, and tax preparers, serving as the backbone for preparing all other financial statements. Essentially, a trial balance is the foundation from which all other financial statements are built. In this video, we will discuss the structure of a trial balance, its significance in the business world, the way it aids in formulating other financial statements, and I will present an illustrative guide to crafting a balance sheet from a trial balance. So let's begin. The structure of a trial balance. A trial balance is essentially a report that lists all ledger accounts of a company, along with their respective debit or credit balances at a specific point in time. The structure of a trial balance is quite straightforward. It consists of a table with 3 columns, 1 for account names, and 2 for their balances, 1 for debit and 1 for credit. The trial balance is typically created at the end of an accounting period, and it is created by adding all the transactions recorded as journal entries in each account. Remember, all journal entries follow the double entry accounting system. That means that each transaction affects at least 2 accounts, and we record these as debits and credits. If all transactions are recorded with equal debits and credits, then your trial balance will always balance. Once we have our transactions recorded in the general ledger, we then transfer these balances to our trial balance sheet. The key here is that the total of the debit balances should equal the total of the credit balances. This checks the mathematical accuracy of our entries. This was a very important check in the olden days, when accounting was done manually in real books. Today, most, if not all, the accounting is kept in sophisticated accounting systems. These systems are designed to display an error if the user attempts to make an unbalanced journal entry. The accounts in the trial balance are listed in numerical order. When creating the chart of accounts, businesses establish account numbering conventions. This is a typical account numbering convention. Assets will all start with the number 1, liabilities will start with the number 2, equity will start with the number 3, revenue will start with number 4, expenses will start with number 5. By following this accounting numbering convention, the trial balance lists all assets first, then liabilities, and so on. This will become very handy when preparing the balance sheet, as we will cover shortly in this video. So what is the trial balance significance in the business world? The trial balance serves several crucial purposes in accounting and financial management. It is a critical tool in accounting for maintaining accurate and reliable financial records. It aids in the detection of errors, facilitates in the preparation of detailed financial reports, and it assists in financial analysis. In the olden days, as I mentioned earlier, it was a critical tool to confirm all debits and credits were entered for the same amount. With the current accounting systems, we no longer need the trial balance to fulfill that purpose. However, a look at the trial balance can reveal other errors. For example, an expense account with credit balances. That could mean the debits and credits were reversed in your entries. Or if any account balance is not within an expected range, that could mean that the entries were posted to the wrong account. The trial balance is a preliminary step in the preparation of financial statements. By listing all the credit and debit total balances from the general ledger, the trial balance serves as a foundation for creating accurate financial reports, such as the income statement and balance sheet. The trial balance also assists in financial analysis. A trial balance provides a snapshot of the financial standing of the business at a particular point in time. It helps stakeholders assess the company's financial health, profitability, and liquidity. It helps users identify trends, assess the impact of transactions, and make informed decisions based on the trial balance data. So how does it aid in formulating other financial statements? Simply, once you have all the account balances in one report, in an organized order, all you need to do is group the account balances per line item in your financial statement. Let's create a balance sheet from a trial balance together. Once you have a trial balance, the first step to create a balance sheet is to classify the accounts. You separate the accounts into assets, liabilities, owner's equity, revenue, and expenses. Then you calculate the current year net income. You do this by deducting all expenses from the revenue amount. You then start creating the balance sheet following the accounting equation format. Total assets equal liabilities plus owner's equity. Start at the top, listing the assets first in order of liquidity, and you add your total for the assets. In the next section, you list your liabilities in order of maturity. You then total your liabilities. The next section, in the owner's equity, you start with capital, retained earnings, which is the company's earnings in previous accounting periods, and finally, you add the net income for the current accounting period you calculated from the trial balance earlier. Add the total for the owner's equity section. You then add the total liabilities and the total owner's equity. This total must equal the total assets. If the totals match, then you have created a correct, balanced balance sheet. And that is all for today's video. If you have any questions, leave a comment below. Thank you for watching. See you next time.